The new MACD COBRA trading strategy is a highly effective strategy with low risk and high rewards when utilized correctly. The only factor that could lead to failure in the long term is if you fail to adhere to the rules. The MACD COBRA system is remarkably straightforward and user-friendly. Once you become accustomed to it and have executed a few trades, you'll discover that you're spending minimal time operating with this system. System setup. In general, the system is very easy. After checking the chart settings, you will see minimal lines and indicators, resulting in a neat and easy-to-read chart. Although there were originally 4 indicators, only 2 were actually used throughout the system. The following are each required indicator and its function. First, EMA, or exponential moving average, 12 periods applied to the typical price, i.e. the average of the high, low and close. The 12-period EMA is calculated based on the highest and lowest prices of each candle. Second, MACD, moving average divergence convergence, default setting. First, the 12-period EMA, or exponential moving average, is a moving average that calculates the average over the last 12 candles. This moving average is exponential, meaning it gives greater weight or significance to the newest candle than to the old candle. Moving averages show the direction of the trend. If the line is up, it means the trend is up, while the line is down, it means the trend is down. Second, MACD. So what is the MACD indicator? The moving average convergence divergence, or MACD, is a technical indicator used by investors to identify price trends, gauge momentum trends, and determine market entry points for buying or selling. MACD is a trend-following momentum indicator that illustrates the relationship between 2 exponential moving averages, or EMAs, of a security's price. It was developed in the 1970s by Gerald Apple. The first component, the MACD line, represents the variance between 2 moving averages, typically the 12-period EMA and 26-period EMA. It's crucial to differentiate between MACD the indicator and MACD the line. The second component, the signal line, is the moving average of the MACD line, typically a 9-period EMA. In simpler terms, it's the moving average of the MACD. Consequently, the MACD line is considered the faster line, whereas the signal line is regarded as the slower line. When these 2 lines come together, they are said to be converging, and when they move away from each other, they are diverging. So, when the MACD line and the signal line move apart, or indicating a diverging trend, it suggests that the market trend is strengthening, and traders should prepare to enter the market if there are price action signals aligning with the market trend indicated by the MACD indicator. This is one of the unique features of the MACD indicator, as it can identify trends while measuring their strength simultaneously. We will leverage this feature in the MACD COBRA strategy. Third, the histogram. The discrepancy between the 2 lines is depicted on the histogram. If the MACD histogram is plotted above the 0 line, it signals an uptrend. Conversely, if the MACD histogram is plotted below the 0 line, it indicates a downtrend. Establishing the short-term trend direction. This serves as the initial component of the MACD COBRA system. The concept is straightforward and forms the basis of nearly every trend-following system ever created. We exclusively engage in trading aligned with the trend. Therefore, the first step is to determine the direction of the short-term trend and prepare to trade accordingly. It's crucial to note that we focus on the short-term aspect. This is where the 12 EMA, for simplicity, I'll refer to this as the blue line, henceforth comes into play. The blue line aids us in easily discerning the market's direction over the last 12 candles. It's the simplest principle imaginable. If the blue line trends upward, it indicates an upward short-term trend. Conversely, if the blue line trends downward, it signals a downward short-term trend. However, there's a drawback to the moving average: it lags behind. Consequently, the actual price has already transitioned from one trend direction to another before the moving average changes direction. Hence, we require a supplementary indicator to determine our trading direction, compensating for the lagging nature of the moving average. And the most reliable indicator we utilize is price. When the price intersects the moving average, we then adjust our trading bias accordingly. To simplify, if the price surpasses the blue line, we exclusively initiate long trades. Conversely, if the price falls below the blue line, we strictly engage in short trades. This means we only purchase the currency when the price exceeds the blue line, and we solely sell when the price descends below the blue line. This is an unyielding rule that is never violated. This fundamental approach serves two crucial purposes, rendering the system significantly more profitable than other trend-following methods. Firstly, it steers us clear of low-probability trades. It prevents us from entering what might initially seem like favorable trade setups, but, in reality, run counter to the prevailing trend, thereby diminishing the likelihood of profitability. Consequently, it effectively reduces the frequency of our losing trades by compelling us to exclusively trade in alignment with the trend. Secondly, by relying on the precise moment when the actual price intersects the blue line to signify a shift in trend direction, we can swiftly enter new trends much easier. Many trend-following systems employ a two moving averages crossover to indicate a shift in trend direction, but this typically occurs after the change has already occurred, resulting in potential missed profits. However, with the MACD COBRA system, we utilize the price crossing the moving average as the earliest possible indication that the trend is altering direction. This enables us to capitalize on new trends before others and yield greater profits than the rest. Therefore, this is the entirety of the process for establishing the short-term trend direction. If the price surpasses the blue line, we solely initiate long positions and buy the currency. Conversely, if the price falls below the blue line, we strictly engage in short positions and sell the currency. Nothing more. Nothing less. Our entry signals. Now, we must determine the reasons for entering the market in whichever direction the trend indicates, and this is where the 12 exponential moving average becomes part of the system. For simplicity, I'll refer to the 12 exponential moving average as the blue line from now on. You'll notice that on the blue lines, I've utilized three lines. A thick inner line and two thin outer lines on each side. The inner line represents the true moving average, depicting the average typical price over the last 12 candles, respectively. However, a single line like that is too narrow to be effectively used as a signal for entering the market. A thin line would lead to too many false signals and losing trades. That's why I've included the two outer lines to serve as a buffer or safe zone. If the price ever falls within the buffer zone of either moving average, it's considered a no-trade zone, and we refrain from entering the market for any reason. But, as soon as the price moves outside of the buffer zone, we start looking for entry signals. And the basic entry criteria are very simple. First of all, we need to determine whether the two lines, the MACD line, or the faster line, and the signal line, or the slower line are diverging, or move away from each other. So, when the MACD line and the signal line move apart, or indicating a diverging trend, it suggests that the market trend is strengthening, and traders should prepare to enter the market if there are price action signals aligning with the market trend indicated by the MACD indicator and the blue lines. In this case, it's a bullish trend. Second, the histogram illustrates the difference between the two lines. In this case, the MACD histogram should be plotted above the zero line as confirmation, signaling an uptrend. So, in this example, the price has moved above the blue lines. Once we establish our trading direction, and in this case, it's a bullish trend, we search for the moment when the price moves above the blue buffer zone. And now, we are above the blue line, so we await the price to close outside and above the blue buffer zone. You should observe that the price has risen above the blue zone, indicating that we will now only engage in long trades. Subsequently, we witness a candle breaking out of the blue buffer zone and closing above the outer edge of the blue zone. As you can see, the price closed above the blue zone. Therefore, the trader should promptly enter the market with a buy position at the opening of the next candle. Don't forget to place your stop loss below the blue zone line, with a minimum target profit of at least 2 times your trading risk. It must always be remembered that the fundamental concept in this strategy is to wait for the price to break out of the blue zone before entering the market with a trade. Now, let me provide you with another example to further clarify. Sell trade. First of all, if the MACD line crosses below the signal line, then it's time to sell because the market is beginning a bearish trend. Next, we need to determine whether the two lines, the MACD line, or the faster line, and the signal line, or the slower line are diverging, or move away from each other. So, the MACD line crosses below the signal line and move apart, or indicating a diverging trend. It suggests that the bearish trend is strengthening, and traders should prepare to enter the market if there are price action signals aligning with the market trend indicated by the MACD indicator and the blue lines. In this case, it's a bearish trend. Second, the histogram illustrates the difference between the two lines. In this case, the MACD histogram should be plotted below the zero line as confirmation, signaling a downtrend. So, in this example, the price has moved below the blue lines. Once we establish our trading direction, and in this case, it's a bearish trend, we search for the moment when the price moves below of the blue buffer zone. And now, we are below the blue lines, so we await the price to close outside and below the blue buffer zone. You should observe that the price has dropped below the blue zone, indicating that we will now only engage in short trades. Subsequently, we witness a candle breaking out of the blue buffer zone and closing below the outer edge of the blue zone. As you can see, the price closed below the blue zone. Therefore, the trader should promptly enter the market with a sell position at the opening of the next candle. Don't forget to place your stop loss above the blue zone line, with a minimum target profit of at least 2 times your trading risk. Exit strategy. The exit is simply signaled when the price crosses and closes on the other side of the blue zone. So suppose you are in a long trade following the trend up. You would close out of the trade when the price crosses back down through the lower blue zone. As seen in the examples above, we can conclude that this is a highly productive trading strategy for making money in the forex, crypto, commodity, and stock markets. The combinations of indicators I have explained in this video can be manually applied as they are not difficult to implement. However, if you need these settings, I have already provided them in the video description column. I have included a template with a system that you can easily apply to your charts, automatically plotting all these indicators accurately. This way, there is no need for any additional complexity. Get the download link in the description. This MACD COBRA trading strategy is an extremely low-risk, high-reward strategy which can and will change your life if you use it properly. The only thing that could make this system fail over the long term is you not sticking to the rules. That's it. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.